Hello and welcome to your Recipe for Financial Success with me, Emma, and my colleagues Becky and Julie.
In each episode, we'll be bringing you a list of ingredients to help you cook up a storm and master methods to finesse your finances. We'll be helping you expand your repertoire and hopefully teach you a few new skills along the way.
So, clear the counters and get your mixing bowls ready for today's recipe. Let's get started.
So ladies, have we got anything nice planned for this evening?
Oh, I have. I'm actually, when we finish here today, I'm off to pick up a ready meal. So when we get home tonight, I've got a fine dining experience in the comfort of my own home.
I'm guessing that's not coming from a supermarket then.
Oh no, it's from one of the nicer restaurants in Norwich actually. So I'm really looking forward to that.
Oh, that sounds like a nice treat.
In fact, I might pop to the wine merchants and get a nice bottle of wine to go with it.
Wow, that sounds rather fancy.
Sounds like a nice treat.
It does. I've been a bit spoilt recently. So yeah, really looking forward to that.
How about you, Becky? Are you up to anything?
I don't have any plans for this evening, so hopefully just a quiet one in.
Sounds good to me.
What about you, Emma? What are you up to?
I think I'm actually going to go for a walk at the beach. So hopefully the weather stays half decent, but then we'll just wait and see, play it by ear.
So let's crack on then, Becky. So do you want to introduce today's episode?
Thanks, Julie. So today we're going to be sieving through all you need to know about banks and building societies. So, Emma, do you want to get us started by telling us what the difference is between a bank and a building society?
Of course. So a bank is owned by shareholders. So what that means, any profit that the bank makes is shared out between those shareholders in what we call dividends. Whereas a building society is owned by its members. So anybody that holds a savings account or a mortgage, they essentially own a little bit of the building society, and they're the ones that will benefit from the profit. So what that should mean is higher interest rates on savings and lower interest rates on mortgages, and hopefully improved customer service as well.
Oh, so Emma, is it safer then for me to have all my money in a bank or a building society rather than just invest it?
So there's two ways of looking at this. A bank or a building society, there's going to be a little bit more certainty about a few things. There won't be the volatility, so you are going to know exactly what you're going to be getting. So you'll know exactly what the interest rate is when you make your deposit into that account. And what's going to happen with your interest is it's going to compound. So over the years of your money being in the savings account, you'll earn more money on the interest. So as an example, I'll try and say this in English. If you had an interest rate of 1% and you had £1,000 in your savings account and it was in there a full year, you would get £10 in interest by the end of that year. If you left your £1,000 and the £10 in for another full year, you'd be getting 1% interest on your £1,010. So at the end of that year, you'd get £10 and 10 pence.
Excellent. Thanks, Emma. So moving on then, you've already said that there's no volatility in a bank or a building society account. What risks are there? Would you say that there's inflation?
Definitely. So inflation, if you're not sure what it is exactly, is a general increase in the prices and the loss in buying power. So thinking about buying some butter to bake a cake. In 1995, it would have cost you 78p for 250 grams of butter. A little bit different now, isn't it?
You've done your research here, Emma.
Yes, I have. So if you were to go out and buy 250 grams of butter today, it would cost you around £1.49. So that's an increase of 91% over 25 years, which would make an average increase of 3.64% each year. Do either of you have a bank account with an interest rate of over 3.6%?
If you know one, I'd be very happy to put my money in it.
Yeah, same. Not even close.
So obviously interest rates on savings accounts are incredibly low at the moment, and it's unlikely that you're going to find any account that's going to keep up with a rate of inflation that high.
What is the rate of inflation at the moment, Emma?
In the UK at the moment, the rate of inflation is 0.5%, but the aim is for it to be 2%. We've still got a little way to go to reach that 2%, but that's what the aim is for it to be.
Excellent.
So what other types of risk are there, Emma, with banks and building society accounts?
So one of the other risks that will probably jump into mind for a lot of people is the risk of default. So this was the problem in 2008 with the financial crisis. In really simple terms, it's the risk that the bank's going to run out of money and they're going to close down and not be able to pay the savings interest rates that they've promised, or necessarily give back the money that you've originally invested. Don't worry, there is something in place to protect you. There is a thing called the Financial Services Compensation Scheme, also known as the FSCS. And what this means is that each person is protected for up to £85,000 per financial institution. So if something happened and they closed down and you didn't get your money back, the Financial Services Compensation Scheme would refund you up to the £85,000. So it's just important to remember that it's only £85,000 per person per group. So if you had an account with NatWest and RBS, that £85,000 would cover both of those, but only for the one amount.
Excellent. So I'm sure most people listening have some sort of bank account already in place. Emma, what should you usually use a bank account for?
So there's a few different reasons that you might have a bank account. The obvious is probably for your income and outgoings that you use on a daily basis, so buying your shopping, normal things. You'd then ideally have a savings account for things that you've got planned in the short term over the next few years, so maybe holidays, birthdays, Christmas, all the nice things that you want to do in the short term. Also make sure you've got an emergency fund.
Oh, okay. What's an emergency fund for?
So an emergency fund is going to be for something completely unexpected. So it could be your boiler goes wrong, or it might be that you lose your job and you need the money to replace your income while you haven't got any money.
So did Becky use her emergency fund for her new Hoover the other week?
She may have done.
I didn't actually. I had some savings in my current account that I hadn't transferred over to my savings account. So I dipped into my savings for it.
And the perfect use for it, because that's something that you needed in the short term, so you use those savings for that.
Exactly.
So your emergency fund is just for those things that you never expect to happen, but you need that money just in case.
So how much would you expect me to have in my emergency fund?
In an absolutely ideal world, you would have a minimum of 3 months of your usual income. So it's just to give yourself enough breathing space that if you didn't have an income, you'd have that money.
Okay.
I need to go home and calculate that now. So Emma, what's the best bank account to have then?
There's so many different accounts on offer and they're forever changing. So it's very, very, very rare for one account to always be the best one on offer. But it really depends what you're looking for from an account. So are you looking for it for direct debits and a debit card so you can use it as your day-to-day spending account? Are you maybe using it for your savings for a rainy day?
Or for a new Hoover.
Or for a new Hoover, and you want instant access to it so you can get that new Hoover absolutely whenever you want it. Or maybe you don't need it immediately and you might consider something like a notice account where you have to give, say, 30 days notice or 60 days notice before you can get your money out. So it's really difficult to say what is the best account right here, right now. But a really good thing to use is something like a comparison site. So moneyfacts.co.uk is one of them. There's Money Supermarket. There's so many different ones where you can go on and choose the filters of what you're looking for from an account and it'll show you the ones that are currently available in the market.
Excellent. And not to bore you all too much, but on the interest that I earn in my bank account, do I have to pay tax on it? How does that work?
Unfortunately, yes, you do have to pay tax on the interest you earn. However, as a basic rate taxpayer, you have something called a personal savings allowance, where you would get £1,000 of interest that you can earn before you pay any tax. And as a higher rate taxpayer, you get £500. So if you had £10,000 in a savings account paying 0.5% in interest, you'd earn £50 in interest, which means you wouldn't pay any tax if you're a basic or a higher rate taxpayer because you're going to be below the threshold for the personal savings allowance.
So it looks like I'm going to have a lot of money in a savings account to have to pay any tax on it then.
So I've actually done a little calculation for you here. You would need to have over £200,000 in an account earning 0.5% interest before you pay any tax as a basic rate taxpayer.
Got some saving to do then.
Yeah.
Definitely. All I would say is if you've got that much in an account, maybe it shouldn't all be in there. Maybe we should be looking at other options for it. But that would be a conversation for another day.
So Emma, if I was looking for a bank account today, what sort of things do I need to look out for?
One of the things you'd need to be looking for is that the account is regulated by the FCA, because that will mean you've then got your cover from the Financial Services Compensation Scheme for if anything were to go wrong. You obviously also want to be looking at the interest rate, any notice period that you may have to give to access your money, whether it has online access if that's important to you, or it may even be important that you have a local branch. So always have a look at those things first. So there's lots and lots of different providers of bank accounts. Some of the names of those providers you'll have never even heard of, but it doesn't mean to say there's anything wrong with them. As long as they're regulated by the FCA and you can consider all of those things first, they're just as good an option as the main high street banks that you may have heard of.
Thanks for that, Emma. That's really helpful.
And with that, we've completed today's recipe. We hope you have enjoyed following along with us today and cooking yourself one recipe closer to a financially secure future.
If you'd enjoyed today's podcast, you can head over to www.recipeforfinancialsuccess.co.uk, where you can find out more information and a full list of ingredients on today's recipe.
For more hints, tips and tasters, find us on Facebook at Your Recipe for Financial Success. Thank you for listening and see you next time.